Hi everyone, welcome back to Be Rich. Interestingly, over the overnight that is, gold took a slight correction. Went down to 4,248 in spot when I was looking at it. I don't know exactly where it is right now, and I put it up on Instagram asking you guys. So, what do you think? Is it profit booking? Is it correction? Or is it time to buy more? Or are you worried about your position? Let's say you've taken a position in gold in excitement, having FOMO, and you're feeling worried. Surprisingly, 45% of you thinking it's profit booking. Quarter of you thought it was a correction. Quarter of you think it's time to buy more gold, doubling down on it. There is, of course, around 10% of you, little less, probably around 5% of you who's worried about the position you've taken in gold. So I hope the position, those 5% of you, your position in gold isn't something insurmountable. I hope you've not leveraged yourself, which I've warned and I begged you guys not to do. So I also was curious to discuss this with Anand. And of course, historically looking at it, Warren Buffett has famously said gold, he has a very strong opinion about it. And I wanted Anand to discuss that and talk about what Warren Buffett feels about gold and why he feels what he feels about gold. So Anand, this thing which we saw, the movement in gold market, what is it? What is the reason behind
It's
it?
a difficult profit taking thing, and it can come down even. I won't be surprised if it comes 10-15% down. So I'm not, but it's been going one way, so it has to come the other side.
Hmm.
So it's a short term bump.
Hmm.
And for those who got in early, when I asked them to got, this is nothing, hardly nothing.
Yeah, it's a hardly any movement in percentage points.
Even if it drops 25% for them, it's hardly nothing.
Yes.
So I'm not too worried about it.
Yeah, they got down in the ground floor.
Yeah. On Buffett's aversion to gold.
Hmm.
Buffett likes assets which produce cash flow. I give you some money, you have to give me something back. So you have to produce cash flow. You invest in equity, the company works for it, works with the money, puts it to work and collects profits for it. Whereas if I put it in bond, I get interest. Whereas this is the only instrument where I invest in gold, I get nothing out of it. In fact, I have to spend money to store it separately. Hence his aversion to gold because it does not produce any cash flow. Hence he considers it useless. And therefore he does not invest in gold.
Yeah, so it's like akin to having a, let's say, livestock. In terms of talking about livestock, having a farm full of bulls or a farm full of cows. A cows can, give you milk. You can
But
give
it
you
can give
cars.
you
Yeah,
cash flow.
yeah,
It
cash
can
flow.
give milk. Milk
Eh,
can be sold for
Okay,
cash.
so we have a farm full of bulls. Yes, it looks very nice grazing in the lawn, but other than that, you have to put unless you put them to work, it really doesn't do anything. He says gold really you cannot put it to work, and that's the main reason, and that makes sense as a value investor. Why do you want to have asset classes that give you cash flow? What's so important about cash flow?
Because it keeps growing.
Hmm.
Business happens. Business happens when more business begets more business.
Hmm.
There is growth.
Hmm.
So increasing cash flow means there is growth. In bond you get a fixed return back with the principal back. In equity, as the company generates more cash flow,
Hmm.
the value of the equity keeps on climbing up.
Hmm.
So if there is no cash flow, the value of an asset will not go up.
Will not go up. Okay, so was this the reason why he was looking at the insurance company?
Yes, because it gives them float.
Okay.
Like insurance is a 1 year contract, at least the general insurance which he is selling,
Hmm.
not the life insurance. General
Hmm.
insurance is a 1 year contract.
Hmm.
I insure your car for 1 year,
Hmm.
and there is no accident in the car, I get to keep the money.
Hmm.
So he is wagering on cars, storms, and like that. So he gets the cash flow, he gets it to keep it for 1 year. And he pays out less than what he collects. He collects more money than what he pays out in costs. Therefore, he writes we call this an underwriting profit. Not only does he underwrite profit, I get to keep this money till you get an accident.
Hmm.
So I invest this money and make more money out of it. So I make an underwriting profit, I make an investment profit.
And this insurance company which he owns is owned completely as a subsidiary of Berkshire
Berkshire.
Hathaway. It's not a publicly traded company.
No. He
Okay,
has bought a lot of publicly traded insurance companies and subsumed it into
Berkshire Hathaway.
Berkshire. So
Yeah.
the free cash flow he gets from the
Yeah,
business.
because the reason why I'm saying it is a lot of you get immediately confused when we say Anand says this, immediately think, okay, I should go buy LIC because you think in insurance company, free cash flow and all that float, and you get confused. There's a huge difference, right?
There's a big difference. How you put the float to work matters.
Yes.
Here, the LIC float is meant to serve the government and the political masters. So the Indian corporates don't put the floats to a proper use, the way he works float. So it depends on what you do with the float. The float, you can keep it in FD and get 7% interest. You can put it somewhere and get 8-9% interest. Whether you are able to leverage the float and get 15-20% from that is the question.
That is the key question here. And that is where Buffett has been very successful.
Buffett has been
Taking cash which is lying idle and making that cash work.
Yes, where he has succeeded over the last 50 years.
50 years.
And he has consistently beaten the index.
Okay.
And now he believes lending money to Uncle Sam is profitable. So all his bonds are 3 months, 6 months bonds, which is getting 5 to 6% return, 4.5 to 5% returns. And he's the fifth largest holder of government bonds now.
Okay. So that said, how come he doesn't worry about like all the rest of the world and the rest of us worrying about US debt, the interest rate, and the government shutdown, and we talk about uncertainty and all that. Why he seems unfazed by Americans?
He has invested globally. So he has got positions all over the world. He owns companies which sell products all over the world. And he outright owns companies which people will consume chocolate. Whether government is functioning or not, they will eat his chocolates and ice creams and Dairy Queen and the chocolate company he has. So he basically produces what you need for day-to-day living. He produces chocolates, he produces the grocery, Heinz and Kraft. He makes carpets, he makes furniture. You need to buy all that, irrespective of whether there is a recession or not. And he has the best priced ones.
And he's also famously said, "You'd be foolish to bet against America."
Yes, because he feels that America has a long way to grow and will continue to grow. And the best years of America is he already has invested and made money.
Okay.
While he is talking all this, he is also making global investments.
Yes.
His Japanese
That's what I
investments
wanna-
have cost $30 billion.
Correct. That's huge.
That's huge money. And he's investing in America into European insurance companies also. So he is interested in investing in any company which will give him reliable cash flow. He is at the time, all the time worried about the cash flow. And the cash flow is the predictor of results.
So, as nascent investors, learning about value investing and getting into it. So, for us, would it be prudent to learn about cash flow and focus solely on
No,
learning?
for you, the problem is people like Buffett have access to credit anytime. So they don't need cash. Most of you who are following me need cash.
Correct.
And you need urgently. Suppose your father falls sick, tomorrow you will need cash. For you, it is better to keep some money in fixed deposits or term deposits, most of it in bonds and stocks.
Okay. So there you guys go. I mean, Anand's strategy, yes, it's great to look at Buffett. It's great to see what he does with gold, but that doesn't reflect for us. We are very small, and our mindset and our life needs are very different from Warren Buffett. So us having a strategy of having a bit of gold and a bit of security in FD for liquidity, and the rest of it being parked in bonds and taking the returns from those bonds and
That's exactly what we do.
and putting them back into equity would serve us much better in the long run. And hopefully, a few generations down, one of our grandchildren will be happy that we did this and they'll be able to become a Buffett themselves.
Thank you for watching Be Rich. I hope you enjoyed this video. If you did enjoy this video, send this video to your friends and relatives and have them take a look. Kindly do subscribe to Be Rich.
Thank you.